Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar bullish traction has eased somewhat against the greenback, although the Australian pair still currently remains above the 70-cent mark. It's still a little bit apprehensive in terms of challenging the upside after the bulls did take the challenge a little further overnight, but soon ran into resistance around 35 after briefly looking there and noticing that the bears still harbour this region, as you can see from this point here in late April, early May, and also last night. From the rejection does give some guidance that we should see a move towards 69.75, with the objective still holding at 69.10.35. There is at this point some divergence. What I mean by that is when prices make new highs, one here from this bearish outside range day that has been negated, and also from this rejection at 35, you can see now that the indicator is actually dropped from this point here to here, giving some indication that the bears are getting slightly better in terms of the upper hand. Trading bullish or bearish divergence is a popular strategy to take advantage in any market. While there are numerous strategies, divergence is probably one of the most popular trading signals because they are dynamic and most often offer a reliable, high-quality trading signal reversal when combined with other trading tools and concepts. In technical analysis, divergence can be an important warning signal that a bearish or bullish trend is coming near to an end. Divergence appears when a technical indicator, as I mentioned, begins to establish a trend that disagrees with the actual price movement. As you can see here, the market is going up, the indicator is going down. So therefore, it keeps my bearish view. The overall outlook still remains to a bear case since taking out the 113.30 level, the rejections twice from that level, and also the previous 3 inside range days from this bearish outside range day, along with the marriage between the RSI and the MACD, holds overall the negative outlook. Now later today we do have the US Bureau of Labor Statistics to release the closely watched monthly data on the non-farm payrolls report. It is expected that for June holds 164,000 new jobs, where previous was 75,000. The average hourly earnings at this stage is forecasted at 0.3%, previous was 0.2%. And the unemployment rate is expected to hold steady at a 49-year low at 3.6%. Also overnight, the European markets got a surprise announcement that Christine Lagarde is to be picked as ECB's new president. So a little bit interesting to see where that one goes. For the technical outlook, I'm holding to 112.30.40 as a target where I've outlined here. And as I say, 113.30.40 to cap. Well, the dollar yen still at this stage is holding to a bearish case since the rejection of 108.40.60. Now, overnight, the price action was hardly unchanged due to light volume, along with the holiday shortened trade week, as the US takes a break in observance for Independence Day. As the dazzling 4th of July fireworks go off, it is likely to see things start heating up into tonight's non-farm payrolls release. Now that is at 10:30 Sydney time, so do keep a very close watch on that time frame. Due to the fact is that markets may start getting a little bit whipsawed or choppy, and therefore I do recommend to change and lower or rise your stop loss and take profits accordingly to your risk management. Nothing's really altered from the pound outlook since the break of 126.35. Technically, I still hold a view to the downside. The ADX is trending. The target is at 125, figure 20, with a short-term resistance holding at 126.45. Looking at gold, the market is now holding to an uptrend that comes in around 1,395 to 1,410 on the wide, that is. If this is a double top pattern, then we do need to take out the level of 1,378.84 to give us a move down to 1,335. Do trade very cautiously into tonight. The only aspect that doesn't get the market so negative is that we are, at this present stage, priced in for a July rate cut in the US. Therefore, could see potentially gold retest the top side. So not a double, could end up being a triple if it rejects the level of 1,438 again. Let's see how it plays out. But technically, the market is a little bit on the softer side. Wrapping up with oil, little to add. Just the fact is that the gains from the previous day slipped overnight and does give some concerning fact that the bears are growing in substantial numbers. And therefore, since the break of 58, could see a move down towards 55 as an objective. But I still hold to a neutral case. But also the US-China trade talks are about to resume. That could put a bit of pressure also on the downside. Well, that wraps up for today. Thank you very much for joining me. But as I mentioned again, don't forget the non-farm payrolls tonight at 10:30 Sydney time. But for now, look out for the intraday report. And I hope you enjoy this great day and a great start to the new weekend.